Why Warren Buffett never chases trends. What if I told you the greatest investor of all time became rich by ignoring what everyone else was excited about? Sounds backwards, doesn't it? Every market cycle has a new obsession. .com stocks, cryptocurrencies, meme stocks, artificial intelligence. The headlines scream that this is the opportunity of a lifetime. Friends start talking about it. Social media fills with stories of overnight millionaires. Yet Warren Buffett usually does something that looks almost boring. He waits. And that's exactly why he's Warren Buffett. Here's the surprising part. Buffett isn't smarter because he predicts the future. He's smarter because he understands human psychology better than most people understand the stock market. His biggest edge isn't secret information. It isn't complicated mathematics. It's emotional discipline. Today, let's explore why Buffett never chases trends and why this single habit has quietly built one of the greatest fortunes in history. Imagine you're walking through a shopping mall. One store suddenly has a line stretching around the building. Without thinking, you assume whatever they're selling must be valuable. That's how our brains work. Psychologists call it social proof. When everyone is moving in one direction, we naturally feel safer following the crowd. The stock market works exactly the same way. When technology stocks exploded during the late 1990s, investors believed traditional businesses were finished. Companies with barely any profits saw their prices soar simply because everyone else was buying. Buffett watched and did almost nothing. People called him outdated. Some even said he had lost his touch. Then the dot-com bubble burst. Billions of dollars disappeared almost overnight. Buffett didn't avoid disaster because he could see the future. He avoided it because he refused to let excitement replace judgment. Most investors don't lose money because they lack intelligence. They lose because they confuse movement with progress. When prices rise quickly, our brains release dopamine, the same chemical linked to anticipation and reward. Suddenly, buying feels urgent. Waiting feels painful. That's the trap known as FOMO, the fear of missing out. Buffett understands that the market constantly tests your emotions. Every headline whispers, act now or regret it forever. His response? If I don't understand it, I don't buy it. That's his famous circle of competence. Instead of chasing what's popular, he invests only in businesses he can understand, evaluate, and hold for years. Notice something important. He isn't trying to own every opportunity. He's trying to avoid bad opportunities. Take cryptocurrency. Whether you're bullish or skeptical isn't the point. Buffett simply admitted it wasn't within his investing framework, so he stayed out. More recently, artificial intelligence has become the market's hottest trend. AI may genuinely transform industries, but Buffett still approaches it with caution rather than excitement. Why? Because popularity doesn't automatically equal value. It's like buying a house simply because everyone else on your street wants one. A smart buyer asks a different question. What is it actually worth? That single question separates investors from speculators. So what can we learn from Buffett? First, don't mistake noise for opportunity. Second, patience is often more profitable than constant action. Third, every investment should make sense before you look at what everyone else is doing. And finally, remember this. Compounding doesn't reward the fastest investor. It rewards the most disciplined one. The next time the internet tells you there's a once-in-a-lifetime investment, pause. Ask yourself whether you're making a decision based on careful thinking or simply following the crowd. Because Warren Buffett's greatest investing secret isn't hidden in a spreadsheet. It's hidden in his ability to stay calm when everyone else is losing theirs. If you enjoyed this episode, subscribe for more insights into the psychology of investing, leave a comment sharing a trend you resisted or one you wish you had, and share this with someone who needs a reminder that real wealth is built with patience, not hype. Until next time, think independently, invest wisely, and let time do the heavy lifting.